Hi, welcome to July market update. Like we have done in past, today we'll be talking about a sales summary, inventory story, and a pricing picture. Also, I'll be giving my advice to buyers, sellers, and investors. So let's dive in. Sales as a whole in June has made a huge comeback comparing to snail-like pace at the beginning of pandemic. For months now, we have been talking about a pandemic and great recovery in great details. As of June, I'm very proud to say we are there. The month of June saw us to achieve the sales numbers only 1.5% of June 2019. In May, we were 44% of our last year pace. So everything considered, wow, this is a wake up. Now, let's break down the differences as per the market segments. In a detached segment, we have seen just about 0.5% less sale than last year. In an attached segment, we have seen just over 2.5% more sale than the same time last year. The hardest hit was apartment segment with around 13% less, and the biggest winner of the month of June is actually surrounding of Calgary. They have seen an increase of sale for just around 11%. That comes to across Calgary real estate region to 1.58% less sale than the same time last year. Here is the graph displaying the sales from the beginning of May to the end of June that shows the rebound trajectory that we have seen and further highlights the fast-paced recovery we are having. Will this continue? I think so. There are signs that there is enough of pent-up demand for a few more months, similar to our regular spring and summer selling season. To legitimize the claim, I look ahead to showings currently happening on the market and also number of pending deals that are written between sellers and buyers at the moment. Last month I reported that the showing pace was just about 15% of previous year pace. That was already an incredible achievement for our city, showing strong signs of a life in our real estate market. We started 15% behind last year's showing numbers at the beginning of June, and now at the end of June we are 25% ahead of last year numbers. Here is the graph to show the trajectory we have taken. It's pretty incredible. Now we need to talk about the pending deals, the deals that are currently under contract between sellers and buyers. As we finish May, we have made up a lot of ground. We went from minus 45% all the way up to only minus 7%. We continued that momentum in June, and these were the results. As you can see by the following graphs, we continue to push upwards. There were times in June when we will be pushing 20% ahead of last year's pace, but there are some days when we will fall a little bit behind. Overall, we ended month of June at 4% ahead of our last year pace. Again, strong numbers of new deals being written are early indicator of a published sale. So as long as we see the current trend maintain its momentum and showings remain strong, we can expect that sale figures maintain their busy pace. Last month I said if we could have 10 to 15% of a last year pace, we would be laughing and could feel really confident. Now you have my blessing. Feel confident. The wave is here, so ride it while it lasts. So let's talk about the inventory. In my May update, I discussed a new trend that started emerging in the month of June. The COVID pause was certainly over, and new inventory was flooding the market. In June, we saw this trend continue for the most of the month, resulting in us listing about 6% more properties than the same time last year. As you can see on a daily graph we use, we have seen increased trend in the first half of June, but that has adjusted by the end to a little bit more modest. We started the month having 22% less active inventory and ended having about 70% less inventory on the market. The gap between the last year and this year is as close as it has been since March, but I still like where our total inventories are relative to our pace of sale. This means that we still have about 1,300 less active listings on the market than we had in July 2019. The peak number of new listings flooding to market may have happened now, as it normally would have, and may settle into a mid-summer pace. But not all markets are opening at the same pace. So let's take a look at the numbers. Detached homes almost 6%, attached homes just below 14%, apartments just below 1%, and surrounding 6.3%, bringing us to the total of 6.48%. So let's talk about the pricing picture. I leave the pricing picture for the end because it is directly impacted by our situation and dynamics happening in the inventory levels and a pace of sale. The big concern was about housing pricing falling because of the pandemic and economic shutdown. Well, I can tell you this. Our pace of sale is 20% over the last year and inventory levels are 17% below. This isn't to say that we won't see some smaller price adjustments because of overall pessimism and the state of our economy. But right now, at this point, we are near a hold state of our pricing. But I want to reiterate my words for now. Well, let's discuss numbers from June. Detached homes are down for 1.98%, attached for 3.83%, apartments for 3.92%, and year-to-date drop is 1.6%. So it is fair to say that there is still downward pressure on the pricing. The increased pace of sale and lower number of inventory has gave us some protection from a major correction, but they can change very quickly. My advice for the buyers would be very similar to our last month's advice. If you're entering the market today, you will be surprised by pace of sale. Sale in June was very similar to a sale in a month before. As we discussed, June pace of sale is very similar to June 2019. But the last 2 weeks has shown 20 to 25% more activity than June 2018. So market is acting faster than a micro stats for June. If you're purchasing apartment style condo, there will be a little bit less pressure because that is the market that is lagging the most, contrary to a detached and attached market. If the place seems well priced, don't be surprised if it doesn't last long. If it is not the right fit for you, don't feel pressured because there is more coming to the market and there will be more properties to look at. All that said, happy searching. But be sure to have a market expert on your side to help you with advice. This remains very exciting times for sellers. A very welcome surprise to the homeowners who need to move or just want to move. Sales have rebounded and the inventory in June is still way below the last year numbers. Based on my predictions and daily review of market data, there is a strong month ahead for sellers. I mentioned in my previous month update that inventory has ramped up, and it certainly did. The gap between our active inventory versus the last year numbers is as close as it has been since the pandemic started in March, which simply means the tables are turning. We have gone from very undersupplied to fairly supplied market. And I believe that August is going to bring us to oversupplied market. If 2020 is a sale year for you, take the advantage of a wave of demand. We don't know how the fall is going to look like, if there is going to be a second wave, or what effect it would have on us, for how long the government is going to support the economy until people stand on their feet, if the current pace of sale is going to continue and for how long. Again, each market and a price range is acting differently and have different dynamics. So please don't be afraid to reach out to me for an expert advice. Here is my advice for investors. I heard this question very often. How with all of those things changing, I can make a sound investment decision? Well, that is a good question. As an investor, buying for appreciation is oftentimes very dangerous. Here are a couple of things that we do know. ATB releases a report in its Owl publication stating about the continuous growth in a population of Alberta. And not only growing, but leading the country in a net migration. In fact, for 7 straight quarters, we have seen a growth in a net migration to our economically beaten up province. It is tried and true economics. When population grow, the economy drives forward. Secondly, Premier Jason Kenney released a relaunch and recovery program. It is a bold, detailed and long-term strategy how to reignite the Alberta advantage. The months and years to come will really tell the story of its effectiveness, but I'm optimistic that it will be successful and make a difference. So as an investor, those items should give you confidence beyond the short term and make a sound decision. So keep your eyes keen and run cash flow mad, and there is plenty of opportunities out there. If you ever need a portfolio or a single consult, please reach out to me. Good luck and happy investing. Well, that would be all for this month. I hope that this market update gives you a value and provide a little bit different perspective from all of the pictures and the headlines you're reading out there. I would love to hear your thoughts and questions, and I promise I will answer every single one of them.